Welcome to Market Minute. Today we will analyze the Paytm Q3 result and what the investor can do post this result. We will see the financial highlights and the operational highlights over here, and the revenue from operation stands at 2062 crores, which is 42% year on year and 8% quarter on quarter, and the contribution profit stands at 1048 crores, and which is 131% year on year and 24% quarter on quarter. EBITDA before ESOP cost turns positive this quarter, and which is 31 crore, and it is an year on year improvement of 424 crore and a quarter on quarter improvement of 197 crore. The operational highlights are they have distributed the loans value of 9,958 crore, and which is an improvement of 357% year on year and 36% quarter on quarter. The total merchant subscription stands at 5.8 million, and the last 12 months they have added 3.8 million, and the last 3 months they have added 1 million. Let's see the bird view of revenue, cost, and EBITDA before ESOP cost profit of Paytm. So there are three business lines. One is payment service, and then a financial service, and then a cloud and a commerce. And in the payment service, it comes to be 1197 crore of revenue, and which contributes 58% of entire revenue, and the financial service is of 446 crore, and which contributes 22% of the entire revenue, and the commerce and cloud of 420 crore, which contributes 20% of the entire revenue. And if you take into the payment service, it has the two more category of the revenue. One is payment processing margin and the subscription charges. This payment services is nothing but the payment UPI services and the merchant services, subscription service. And if we go to the financial service, it is of loan distribution and collection. And if you get into of commerce and cloud, is of more of like ticket booking, flight ticket booking, or it can be of movie tickets and etc. And also they also include the co-branded credit card through which they will be able to cross sell. So this comes under the commerce and cloud business. And the entire revenue contributes, it seems to be 2062 crore, and which is 42% year on year. And when we reduce the direct expenses, we get the contribution profit, which stands at 1048 crore, which is 131% year on year. And if you see direct expenses, we see payment processing charges, which stands at 7,038 crore, and promotion and cashback of 91 crore, other direct expenses of 186 crore. And we can see the indirect expenses of 1016 crore, and which includes employee expense, software and cloud, marketing, and other indirect expenses. And if we reduce indirect expenses from contribution profit, we get EBITDA before ESOP of 31 crore. We can see this sustained revenue growth from the March 2021 to December 2022 quarter, which is 2.5x growth it has Paytm able to achieve. And on the other side, if you can see the indirect expenses is reduced from 73% to 49% from March 21 to December 2022 quarter. So they were able to achieve, they were able to reduce the indirect expenses to a greater extent. And if you see the contribution margin, they have increased from 21% to 51% of the revenue. EBITDA before ESOP cost margin, we can see March 2021 they were of negative 51%, and they were able to achieve positive 2% in December 2022. What are some of the positive outcomes and the negative of this Q3 result? So if you see, the company were able to achieve positive EBITDA of before ESOP in this quarter, and which is ahead of their guidance. They were planning to achieve these by the September 2023, which is of a positive sign. That's why the market has cheered the outcome, and they have in 3rd of Feb it was like 524 per share, and it is increased 35% and reached a peak of 705 on Thursday, February 9th. If you see the listing price, the cons are like for listing price was 1950 per share, and current market price is around 650.95, and it is way far to reach the listing price. And we see the price to book value, which is of 3.21, which is highly priced, and it functions in a very competitive environment. Even if you see of subscription UPI services, there are different players like PhonePe and GPay, and if you take a loan offer, no loan disbursement and collection, there are other players in the market. And then also if you see the booking app, there are multiple booking apps are there. And the other one particular reason which led to fall in the price from 705 to where it trades at 650 is because of Alibaba sells its stake of 3.3%. Entire stake is being exited by the Alibaba group. So let's take the quarterly results, how it is in Excel from the September 2020 to December 2020. If you see, the net profit is still at a negative, and which is of minus 436 crores, and it is still considerable to look into the net profit of the company. And if you see the quarter on quarter, if you see, it is still it has to perform well. So what should the investor do post Q3 FY 2023? If someone is planning to invest in Paytm, it is better to wait for a few more quarter to see how the company performs over the time, and were they able to make a consistent positive of ESAP, like EBITDA before ESAP, and then it's better to take a call. And if there is someone who invested in the Paytm, and what they can do is they can look for the some exit strategy, and when they feel so it is of a better priced, then they can exit. Thanks for watching the video, and if you do like the video, do like and share with your friends, and to subscribe to our channel. Thank you.